Good morning, good afternoon, good evening, ladies and gentlemen, wherever you are. It is 4 a.m. Singapore time, and we are here. We are here for the market close. We are here for NVDA's earnings, and I believe a couple of other companies as well. Let me just pull up NVIDIA. We got our coffee. We got our screens up. Let's see. Do we have NVIDIA earnings? It's 4:01. If you take a look, we are still waiting. Okay, Salesforce Q3 revenue 11.42 billion to 11.5. So wow, that was surprising. I thought after ServiceNow did well, we should have seen Salesforce do better. And I think CrowdStrike is having their earnings today too, right? CrowdStrike. Let's pull everything up. Let's see. Good morning, good morning. Thank you to the four of you being here. We are taking a look. I am surprised that Salesforce missed expectations. We're looking at $11.5 billion, but we actually got $11.4 billion. How is Salesforce doing? Salesforce, yeah, it's up 6% though. Market's happy. Let's take a look. Up 7%. Wow. Okay, let's take a look. All right. No, this is Q1. It's Q1. Where is Q2? Morning, Kunal. Give me a minute. Let me pull it up. Okay, RPOs accelerate to by 14% year over year, raises full year revenue guidance by 200 million. Did it not just see 11.3 or $11.4 billion in revenue? So did they miss on revenue and then people just ignored that? Take a look. Salesforce, what's the expectations? Okay, so I think it depends on where you're looking at. Okay, on fiscal AI, it does show consensus revenue to be between 11.2 to 11.3. So I guess they did come in within range. That explains it. I thought they were supposed to do 11.5. Uh, if they miss on revenues, I don't think we are going. And like no indication so far this quarter has shown us that there is going to be a miss on revenue. So I'm still expecting around just over 91, 92 billion dollars. All right, if you take a look at Salesforce, current RPOs review of 33.5 billion, up 14% year over year. That's what we want to see. Uh, Remaining performance obligations 66.3%. All right, so actually the results for it's not too bad actually. See, we delivered one of our best quarters of performance on every key metric. AI is delivering value. Operating margin 20%. Wow. Net income $4.24 per share, up 120%. Diluted net income per share of $5.90, up 103%. Return $364 million in dividends. Okay, so it depends on the expectations, right? Earlier on, I was looking at $11.5 billion in expectations, but it seems that on fiscal AI, it says expectations were between 11.2 to $11.3 billion. So this basically came in the high end of the expectation. Agent Force data 360 business revenue reached nearly wow. ARR is $3.9 billion, up 210%. Do they have the actual presentation out yet or no? Okay, I think it should be better. I realized I wasn't connected to the correct mic. No, but Salesforce numbers look pretty decent then if expectations were at $11.3 billion. Yeah, I wasn't connected to the correct mic. Okay, Salesforce up 11% on the day. Wow, markets really like this move. Congratulations, everybody who is in Salesforce. Let's take a look at what's happening with CrowdStrike. Where is CrowdStrike? CrowdStrike up 8% on the day. Wow. Bullish cybersecurity then. No, I think maybe I've just been thinking like whether or not cybersecurity is one of those names where I just have to bite my tongue and buy it at a slightly richer valuation like Palantir was back in the day. Okay, let's take a look. Let's pull up CrowdStrike's data. Do we have NVIDIA yet? What time is NVIDIA releasing their earnings? Let me see. NVIDIA. Give me a minute. I'm just trying to take a look at. I'll pull up CrowdStrike for now. Looks like market's willing to buy. I think NVIDIA might go up. Yeah, it seems like it. Let's take a look. CrowdStrike. Do we have Q2 results for? No. Where is it? CrowdStrike. Okay, I got it. CrowdStrike Q2 2027 results. Net new ARR of $333 million accelerated to 51% year-over-year growth. Net new ARR growth guidance beat by 630 basis points, 34% year-over-year growth at the midpoint. Fantastic. $2.29 billion in ARR from accounts that have adopted Falcon Flex, accelerates growth to 101%. Yeah, revenue 1.47, gap loss 33 compared to 105, so they've really scaled back on their loss. Non-GAAP income from operations was 300. So GAAP net income was 5.3 million compared to a loss of 70. So they're back in the profitable region, diluted. Yeah. Look, they are this is really one of those companies that if you bought in the blue screen of death era, if you really believe that they are the underlying security system for like the majority of the world's major enterprises, you are getting rewarded today, right? Free cash flow, uh, $377 million while the printing, compared to $283 million second quarter of 2026. Cash and equivalents grew $5.1 billion. So it's not that, yes, they might be they are reinvesting heavily back into the company. You're seeing net income not being very attractive, but on a free cash flow basis, fantastic, fantastic. Uh, let's see. Has Nvidia released their results? No, we are not getting it yet. Yes. Okay, so we are still waiting for Nvidia. Are they releasing at 5 a.m. Singapore time? The conference call for Nvidia is at 5 a.m. Singapore time. Let's see. Okay, so we are looking at these are Wall Street's estimates while we are waiting for Nvidia. You can see 210 EPS, revenue 92 billion. So if we come in at 93.9, that was the key number that we were talking about, then we are looking at basically 100% year-over-year growth. But again, for Nvidia, at least to me, the fear when you are invested into a company like Nvidia, it's never about whether or not they're going to beat earnings. We know that they are likely going to beat earnings. If they do not beat their own expectations, that's probably when you start to get a whole lot of fear coming into the markets, right? So with how bullish Jensen has been, we were announcing the $500 billion deal with the financial institutions, or not deal, the memorandum of understanding. I don't think he's going to be announcing that and then missing on earnings. I think it's very, very unlikely. The question is whether or not he beats earnings enough for markets to be happy. I am on Bloomberg now, so I'm just waiting to. We are 5 minutes away from Nvidia's earnings. Apparently, we are 5 minutes away from Nvidia's earnings. Based on the countdown on Bloomberg, I don't think I can share the screen, but yeah, I think 220, 230. That might be fair for now. I'm thinking that it could end the year even closer to 250. So it depends on how Q3, Q4 turns out. But yes. But if you are looking at this as a gauge, I think Nvidia, if they usually they tend to beat the street's expectations, right? So that means we're expecting earning EPS of more than $2.10. Uh yeah, EPS $2.10. What's the that means I think their P ratio is going to be compressed even more. Let me take. So I think right now we are also looking at what Jensen actually tells us about the AI trade. I think there has been a lot of uncertainty right now in the space, or when it comes to the demand, whether or not there is visibility into the future and how far into the future, and to use that as some sort of a ballpark. Good morning, my dog. Wow, 2 minutes to Nvidia's earnings. 2 minutes 51 seconds to Nvidia's earnings, ladies and gentlemen. Let's see. Let me pull up my spreadsheet so that we can fill it in once we're done. You're here just in time. Yep, 4 a.m. Singapore time. Wow. Let me pull up my Nvidia. So this is what I use to just have a broad overview of some of these companies. So yeah, let's see. I mean, what are we looking at, right? I think we want clarity around the kind of demand going forward. I think we want to try and understand where they see the $500 billion of MOUs being allocated. You're welcome. Happy to be here. Happy to be here. Uh, yeah. I mean, I mean, yeah. Even if I wasn't streaming, I would be up to listen to this. So might as well. Yeah. I think interestingly I think what is interesting for me, or what could really cause the stock to rise, is when we hear commentary over how that $500 billion is likely going to be deployed. Um, I think we want to hear a little bit of commentary around, at least for me. I want to hear a little bit of commentary around the recent news article about them increasing their prices 15%, because it seems like all of that is purely down to memory. So if Nvidia does let's see, if Nvidia really does 210 on EPS, 1 minute to Nvidia's earnings, by the way. If Nvidia does 210 on EPS, what are we looking at on an EPS basis? They did 187. Where's my phone? 187 last quarter. They did 187 last quarter, 162. So that's 340. 340. Yeah, nearly 350 is 162 and 187. 349. 349 plus a dollar, but plus a dollar 470. Nearly 470. Yeah. Yeah, I think 240, 250 reasonable, especially if you get Q3 results. Let's see. So we are looking at $1.62. So we are around four. Okay, on the trailing the last 3 quarters, we are at $4.78, 79 cents. Am I right? Plus 210. You're looking at a trailing 12 months EPS of around 690. So if you get 220 divided by 690, they're at a 31 times PE on a trailing 12 months basis. So I think forward looking guidance will be important. Let me We are still waiting. It seems I think anytime now. We are expecting NVIDIA to release. It's out. Why am I NVIDIA dropping? I see on Bloomberg that it's down 2%. NVIDIA's earnings. Let's see. EPS $2.22 though. Revenue 96 billion. And it drops like a brick, 204. I mean, yeah, I think this is not surprising. Let's pull up the results. Let's see. I'm not seeing them here yet. SEC filings quarterly results. Yep, but NVIDIA is down. Okay, I'm gonna pull up the. Okay, let's take a look. What in the world is happening with NVIDIA right now? After hours down 1%. Okay, so we are recovering somewhat. We are down only 1.2% right now. Uh Margins okay, memory prices impact cost of sales. I think margins seem okay. From what I see, yeah, okay, I got it. Okay, it's out. I have it. Let's take a look. Okay, so revenue 96.2 billion that is very strong. We were expecting 92, 93. Revenue for Nvidia came in at $96.2 billion, added a record $15 billion of revenue quarter over quarter. Year over year growth accelerated for the fourth consecutive quarter. And this is exactly what I'm saying with Nvidia, right? It was never a question about whether or not they can beat their top and bottom line. I think we all expected them to beat their top and bottom line. The real question is whether or not the markets are happy with the extent of the beat. Data center revenues, hyperscale are 48.7 billion, AI clouds, industrial enterprise at 40.3 billion. And I think this slide is important because a lot of people feel like Nvidia is heavily reliant solely on the hyperscalers, but what you are actually seeing over here is that this is actually quite I wouldn't, it's not even yet, but it's like a 60-40 split. It's not as bad as people make it out to be. Gross margins, we are looking at 75%. I think that's more or less in line with expectations. Nvidia at 208 now. Yeah, we basically gave back the initial 2% drop, right? I think markets are pretty happy. Well, I just realized service now is up 4%. I think it's a good day for my portfolio. Yeah, it is. I mean, apart from SoFi being down 1%. Let's continue taking a look at the rest of the numbers. Operating expenses for 8.4 billion. Yeah, $8.4 billion investing to address the multitude of growth of earn EPS non-GAAP $2.22, GAAP $2.46. Okay, so two $2.22 is fantastic because we are, like I said, this brings their EPS to around $6.90. So we are looking at a trailing. I mean, the one thing I would say is that maybe because with EPS at 222, uh, that at today's prices you are basically implying PE of around 31, right? So you really need to have a even bigger growth in EPS for the markets to appreciate this. Yeah, I mean 75% gross margins is really much in line with what people expected. So maybe over the next couple, I'm just wondering whether or not the next couple of days, if we get a pullback over here, I may double my leaps position because this has been resistance for a while previously. This could just very easily turn into support, right? Oops. So the 200-day moving average, I think there are a couple of things. If the market really wants to give us NVIDIA at a discount, I might just look to increase my leaps position on NVIDIA because this has been resistance for a while. We have bounced off this once over here, broke through, sort of broke through twice, but again very near the 200-day moving average. So similarly, if we come down over the next couple of days because of this earnings, NVIDIA at 206, we are basically looking at, oh sorry, I just realized. Yep. So what I'm looking at is this line over here. For me, this has been very strong resistance in the past. Since October 2025, we failed to break out of the 195 range for quite a while. And since we have broken out of it in March of this year, we actually retested it from the top once, twice, three times. And each time we retested, we barely spent a day or two under this line, right? So if we do get another retracement back here, depending on what Jensen says on the call, I don't expect there to be too many negative things. Um, I think this is really a case of fantastic quarter, but that's not good enough for the markets, and eventually the markets will come to appreciate it because right now you are looking at the trailing 12 months PE at 32 with $2.22 of EPS. It compresses the PE slightly to around 31. So there's not much room for the market to let the PE expand. Right? You're looking maybe for really 250, 260 of EPS, then that's maybe when the market will really start to re-rate this company. So of course, that is a lot to ask for because the expectations were only 210 and they already beat their own expectations. But I think that is the price to pay for being the biggest company in the world. So right now, my expectations is that if we get a sell off for Nvidia, 195, I'm doubling my leaps position. Okay, let's go back to look at the rest of the presentation before we get ready for the call. The call is in 30 minutes. Free cash flow, $21.3 billion, $26 billion of share repurchases. I mean, yeah, this is, at least for me, to be honest, free cash flow, yes, 21.3, that is crazy. That's a crazy number. I'm not too fussed about uh the share repurchase number, if I'm very honest.
Okay, so if you take a look at this, yes, they are paying higher memory prices, but gross margins are still up to 75%. I believe this was very much in line with what they gave us in uh let's see if I can pull up. Okay, gross margins. Yeah, 75% plus is 2 basis points higher. Okay, I mean, they did 75% gross margins in Q1 too. So I the only thing I can think of is maybe the markets are unhappy. They did not expand their gross margins even more. What else is there to be unhappy with? No, but you see, this I'm going to show you. This was actually the expectations for NVDA, uh, when they released their earnings last quarter. Right, so we are expecting $91 billion, which we came in 96.3. Gross margin $75 billion. Operating expenses 8.3, which is very much in line with what we come up with. Operating expenses we did 8.4. They were saying 8.3. That's fine. Gross margin 75%, and revenue $96.2 billion. So I really have nothing bad to say about this quarter. I think right now it's all down to management's commentary. So let's take a look. Q2 gross margin $72 billion. Operating expense, oh, 82 point. Okay, gap is 8.4, non-gap is 8.2. They are basically in that ballpark, right? Diluted EPS, non-diluted EPS. So revenue more than doubles. Let's see. Hmm. Adding to NVIDIA doing the will. Yeah. Let's see what CNBC has to say about this. Do we have it? Okay. Uh, let's see. What invest treasure? I'm trying to see what uh expectations that people have, which is why that caused the stock to slow down. Salesforce up 14%. And I saw an interview with Dario and Mark Benioff. I think that should be interesting. Let's see. Almost 4 years since the launch of OpenAI, Nvidia still seeing massive growth. Oh, wait, what's the actual gross margins? Because I saw 75%, I thought that was it. I just heard this commentary, and I don't think I'm allowed to. I don't think I can share it. But this analyst was talking about 100 basis point contraction in gross margins, quarter over quarter. Is that why we are getting a little bit fussy on NVIDIA's results? 100 basis point of gross margins. Maybe it's this slide over here. So these expectations of 74% gross margins, $108 billion the next quarter. That's insane. So I think in terms of the quarter results, that was good. So this 100 basis point contraction in gross margins, that is what is expected. Is that really to do with memory cost? I don't know. I think we have to listen to what Jensen has to say on the call. But I think this is really another one of those situations where analysts are analysts, right? They are treating the stock like a math problem to be solved. But if you are looking at running a business, yes, you want to have increasing margins. But the difference between a 75% margin, especially if you are expanding on revenue, I don't think it's that big a problem. It's noise on a quarter over quarter basis. Because if you look at it on a annual basis, I don't think it moves that much. So I really don't see if this is the reason why the stock is down 1-2%. I think it's ridiculous, especially if it goes all the way down to 195. I welcome it. We'll be buying more. Yeah, because if you're going to look at it on a quarter over quarter basis, there are certain cycles or certain supply chain choke points that may cause some shift in revenue, that cause some shift in margins. But overall, if they're within a range, for me, 73, 74, 75 even, percent, I will not get too upset. Similarly, if they raise to 76, 77%, I will not get too excited either. Because I think a lot of this may just be noise right now. So that is this is actually a fantastic quarter for Nvidia. Next quarter they're expecting $108 billion. Let me fill in my tabs over here. Data center revenue. Data center revenue. We are at 89. Is it? Am I wrong? Am I reading this right? $89 billion in data center, right? $89 billion in data center revenue. So if we are looking at data center revenue, $89 billion, this is 116% year-over-year growth. We are looking at $96.2 billion in revenue, so that's 105%. So look, if they're doing 108, sorry, I just copy the formatting. So if they do 108, that's back to 90% growth next quarter. So we are expecting about still 80-90% growth next quarter, which is fantastic given the size of the company. They're still growing at 90%. There are so many smaller companies out there that are not even growing at 90%, right? But this quarter they are up, they doubled their revenue. And let's see, net income, free cash flow. Okay. So what is their net income number? Net income this quarter. Free cash flow $21 billion, net income $59.7 billion. So $59.7 billion. So on a quarter over quarter basis, maybe they are not too excited about this. May not be the happiest. That's why I was saying that the EPS beat was not big enough. Like $2.22, that is not a big enough beat. But to be fair, we are looking at around 62% margins, which I have been tracking quite well for the last year. And free cash flows 20. What was it again? Free cash flows of where is 21.3 billion. So 21.3 billion, we're looking. Okay, so I think what, at least to me, like when you're looking at a company the size of NVIDIA, yes, quarterly results are important, but a lot of time this is noise. So if I'm looking on a trailing 12 months basis, sorry, I should be doing it here. On a 12 months basis, revenue would be $302 billion. That's insane, right? And net income on a trailing 12 months basis, that is $192 billion. That is nearly a that is nearly a 67% net income margin. Am I wrong? Take this divided by 103, yeah, 63%. 63% net income margin. Insane free cash flow over the last couple of months. We again take this $132 billion. This is a company that just did $132 billion. This is more than the market cap of Nebius and CoreWeave combined. Am I right to say that? CoreWeave is $48 billion in market cap. Nebius is 58 billion. Yeah. So NVIDIA just did more than Nebius and CoreWeave in terms of market cap in free cash flow in the past year, and they are being sold off because their margins for Q3 are expected to contract by 100 basis points. So basically, I think this is likely to do with memory. So maybe, what, bullish the memory trade. But I think ultimately the memory trade is a lot more cyclical. I like personally, if you were not into SanDisk and Micron early on in 2025, I would not be. Yes, I know that the valuations look cheap for these companies, but you never know when is the end of the cycle. So they are cheap relative to some of the other uh, companies out there, but they're still in a they generally, I still believe memory trades in a boom and bust cycle. I don't think we are out of that cyclicality yet. 15 minutes to NVIDIA's earnings. I have it over here, I believe. I'll pull it up when that comes up. Yeah, but I think in general, there's nothing. What is there bad to say about Nvidia's earnings? There's nothing bad to say apart from the fact that if you want to find a bear case, the only bear case I believe you can find is that, uh, yeah, revenues are. Sorry, there's 100 basis point contraction. Okay, I think. Sorry, I was before we jump into to the rest of Nvidia's. We have around 15 minutes left. Sleep is overrated. Yes, definitely. 4:45 a.m. in Singapore. Let's see whether we have CFO commentary over here. Wow, Okta is up 18%. Am I right to see that? 19%. Look, could this be the end of the SaaS apocalypse? Maybe, maybe. See you, Kunal. So right now we are seeing a video down about 1% after hours. Do they have I thought that after hours. Let me just can Mumu show after hours? Okay, so Nvidia, I think people are a little bit fussy because honestly, because of the 100 basis point contraction. There's no other reason why. Like Nvidia is priced for so much perfection that 100 basis point differential in the expectations. That is what could likely cause the 1% drop. I just want to see what the CFO commentary is. So let's take a look. Let me just mute CNBC for a while in the background. I'm getting a little bit distracted by them. Revenue for the second quarter up $96 billion, record $96 billion, up 106% from a year ago, 18% sequentially. Data center revenue was a record $89 billion, up 117% from a year ago, 96,211. Let me 69. Okay, so we are looking at edge computing. Okay, this is fine. Gross margins increased from a year ago, improved on a mix of Blackwell Ultra. Look, I think the one thing I would say is that last quarter we expanded margins by 14% on a year-over-year basis, and then maybe the 2% increase doesn't seem as relevant compared to the 14% increase last quarter. That's also one of the reasons why the markets, because a lot of the commentary, if you're listening to CNBC right now, people are saying that it's not the perfect beat, right? It's not the perfect beat in revenue. That's maybe why the markets are punishing it a little bit, but we are seeing around a 66%, 66%, just a drop of 0.66. So this could really easily turn around during the earnings call. It's all down to Jensen right now. So let's see what Daddy Jensen has for us later on. GAAP operating expenses were up 55% from a year ago, 10% sequentially. Non-GAAP were up 54%. Okay, there's nothing much to see over here. Commitments. We continue to make strategic commitments across our supply, infrastructure, and partner ecosystems to capitalize on the substantial growth opportunities. We needed to meet demand. Our commitments increased from 119 to wow. Our commitments increased 119 billion last quarter to 279 billion dollars, primarily related to the procurement of memory. Okay, so I guess bullish. I mean, definitely bullish. Micron bullish SanDisk. And they had a deal with SK Hynix, didn't they? NVIDIA and SK Hynix. Am I mistaken? Yeah, they have a partnership with SK Hynix as well. So I guess bullish memory for now, still, right? If you are in the memory trade, congrats. That should still be doing well across the next couple of, like, I think in general, it is very, because of how much on and how fast the AI trade has run away from a lot of people. General consensus right now is that this is bubblish. But for me, the interesting thing is that most of the people who have said it was bubblish has been saying the AI trade is bubblish for a very long time. Which is why I think sentiment, sometimes it can feel like the AI trade is going to end on a sentiment basis. But I always remind myself that just because a stock has run up by a lot, it doesn't mean that it has to come down. So at least for me, where I see the bubble, so it is not a bubble in a sense of the 2022, right? The way that I quantify a bubble is when you see, when you actually see multiples being crazy. Right now, the multiples are not crazy. NVIDIA is trading at 31 times PE. A lot of the hyperscalers sub 25 times PE. Trailing on a next 12 months basis, a lot of them are close to 20 times PE. So from that perspective, is it a bubble? I think on a valuations perspective, even Bank of America said it a couple of days ago. Valuations, because of the strong earnings, are coming into a place where they feel comfortable. But what could be the bubble this time around, different from 2002, is actually the earnings power could contract substantially if we start to see lower demand, because a lot of the excitement right now is generated based on future demand, all of the RPOs and all of that. So if those RPOs do not get realized, earnings contract, they could still be trading at the same multiple, but then the stocks could still come down. So are they in a bubble? I don't think they're in a bubble in the sense that you're going to see a pop and then the multiples start to compress. Like how cheap is like Facebook is already trading at 17 times PE. So how much cheaper is Facebook going to get? From that basis, I don't think that they are a bubble, which is why I think that maybe this can still grow. But what you really need to watch for is really the financing, the debt structures behind this. Yesterday, I was just talking about it. I am worried a little bit about the SEC allowing looser regulations for the data centers backed securities. I think that is a bad move. I think you are asking for trouble. Price of good is excessive will start to drop with competitors. Yeah. Yeah, price of goods is definitely excessive. If you're talking about NVIDIA right now, the thing about NVIDIA is that with the CUDA software being embedded into so many of these big enterprises, it's going to be very hard to unseat them. So because if you're looking at the chips, AMD has chips that theoretically should perform to maybe just, I wouldn't say exactly at what NVIDIA is doing, but maybe 80-90% of what NVIDIA is doing, and yet they are still very far away in second place. Because AMD's margins are still in the 50% range, if I'm not mistaken, compared to NVIDIA, which is 75%. So that shows you the pricing power that they have. But also that also means, like you have pointed out, over time. So the when people say bubble over here, I don't think because to me, I interpret bubble as excessive valuation. But the valuations in the AI trade is not excessive. What to me is concerning is the way that it is being financed and the way that uh the way that a lot of them are being priced as if the RPOs in future are a guarantee. I think that is the risk factor. Um so to me that there is a more, yeah, because a bubble would imply that valuations are overstretched, but it is not overstretched. I think what is the concern is that a lot of these valuations are built on future growth projections, and we are not sure whether these future growth projections are indeed going to come true. Let's see, let's see, supply capacity, capital expenditures, nothing much. Securing land, power, and shells for data centers has become the next critical phase in the AI infrastructure build-out. AI clouds and model makers are seeing extraordinary demand for AI infrastructure, yet many are growing faster than their balance sheet and long-term credit profiles can support. In response, we have entered agreements that help select customers secure the land, power, and data center capacity needed to support their growth. You see, this is where I'm so sorry, but this is where I am more bullish on Nebius CoreWeave compared to Iran. Although I traded Iran for a while, I got nothing bad to say about Iran. I do think that it's important that they own their land, power, and shell. This is exactly what Nvidia is saying right now. But I believe if you're asking me, in that $500 billion of funding that they kind of backstopped themselves with the banks, which of these three companies are going to receive the bulk of it? I would bet that it's likely Nebius and CoreWeave more than Iran. I don't think Iran will receive zero, but I don't think they will receive as much. But yes. We have signed data center lease agreements with terms of approximately 15 years that are expected to commence. This is not, it's not right now. It's expected to commence between fiscal year 2028. So fiscal year 2028 is next year 2027, right? This fiscal year. We expect to reassign these data center leases to third parties. Wow, okay. I think if you look at the CFO commentary, guarantees we have land, power, shells for certain AI. You see, certain AI cloud partners, data centers, lease obligations, their maximum gross exposure under all agreements is $3.5 billion. I'm so sorry for people who think that NVIDIA cannot afford to backstop some of these. If you are looking at this, the maximum gross exposure under all agreements is $3.5 billion. They just did $21.3 billion in free cash flow. Even if every single one of these agreements actually default, this is barely going to be a blip in their free cash flow for one quarter, let alone a year. In August 26, we entered into guarantees to provide credit support on land power shell build out to secure 4.2 gigawatts of SB Energy's Port Pike Technology campus in Ohio, exclusively host NVIDIA infrastructure under 20-year leases to OpenAI. Let's see. Still waiting for listening to the music. So I will wait for that to turn into the actual. Yeah, I think we are 4 minutes away. We are 4 minutes away. So yes, I think that's my take on Nvidia and the AI space right now. I don't think it is a bubble in a sense that one day we're just going to wake up and valuations are going to be compressed. Valuations are decent. I think they are fairly priced. They are priced at for perfection for the size of companies that they're in. Not the hyperscalers, at least Nvidia is. But I think that if you look at the way that they're positioning themselves, the only thing that could take down the AI sector, is some sort of lower demand. The argument is whether or not if OpenAI, if Anthropic isn't able to generate the kind of revenues that they are projecting, whether or not that demand can be absorbed by the rest of the industry. If it can, and OpenAI and Anthropic do terribly after their IPOs, and if they start dropping in terms of their ARRs, I even then I don't think that's a problem, right? If it can be absorbed. So it is not a definite, it's not a foregone conclusion that the moment Anthropic and OpenAI actually post their S1s and maybe given a couple of quarters, people are expecting them to uh, moderate their growth in ARR, then we'll start to see a decline in the AI sector. If demand can be absorbed by the other hyperscalers, then why not? Now, so you are seeing right now, it depends on what kind of company you are. Lower demand or credit squeeze, yeah. Right, can't get finance for funding. Yeah. Yep, definitely. That could be as well. So the thing is that's what NVIDIA is saying, right? NVIDIA is saying we are able to backstop this. Whether or not, at least okay. I think right now, at least the money is not coming out of NVIDIA's own pockets. They're just trying to tell the banks, hey, this build out is real, there is real demand. Finance these guys will be their backstop. It's like their guarantor. Let me just pull up this article. Let me see. Creative private credit solution AI trade. Is that creative? Let me pull up. I saw this article on private credit saying that this private credit is actually better than expected this quarter. Give me a minute. Do I see private credit here? Nvidia's call is starting soon, I think. Let me see.
At this time, I would like to welcome everyone.
All right. So let's listen to the call. We'll talk a little bit more about it after the
All lines
after the
have been
call.
placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, press star 1 again. Thank you. Toshiya Hari, you may begin your conference.
Thank you. Good afternoon and welcome to NVIDIA's conference call for the second quarter of fiscal 2027. With me today from NVIDIA are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. Our call is being webcast live on NVIDIA's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the third quarter of fiscal 2027. The content of today's call is NVIDIA's property. It can't be reproduced or transcribed without our prior written consent. During this call, we may make forward-looking statements based on current expectations. These are subject to a number of significant risks and uncertainties, and our actual results may differ materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, August 26, 2026, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. With that, let me turn the call over to Colette.
Thanks, Toshiya. We delivered another outstanding quarter with record revenue, operating income, and EPS. Total revenue of $96 billion, more than doubled year over year as growth accelerated for the fourth consecutive quarter. The surge in AI demand is driving a global infrastructure build-out, supported by an expanding and diverse set of growth opportunities, spanning hyperscalers, AI labs, AI natives, enterprises, and sovereign customers. We expect to grow revenue by approximately 70% in fiscal 2028. This is a supply-constrained outlook. Q2 data center revenue increased 18% quarter over quarter to $89 billion, with strong contributions from both sub-segments, hyperscale and ACI&E, which includes our neocloud, industrial, and enterprise customers. Hyperscale revenue of $49 billion grew 13% sequentially, driven by sustained strength in Blackwell, reinforcing that more compute drives more revenue. As new GPU capacity comes online, our hyperscale customers delivered strong financial results in the quarter with accelerating revenue growth and expanding margins. With cloud industry backlog now greater than $2 trillion, CapEx by the top 5 hyperscalers is expected to reach nearly $800 billion in 2026 and $1.3 trillion in 2027. Today, we are delighted to announce an expansion of our partnership with AWS. Building on its already vast installed base of NVIDIA compute, AWS is deploying an additional 2 million GPUs starting this quarter through the second quarter of fiscal 29, along with Vera CPUs, some integrated with Rubin, others standalone. AWS will serve NVIDIA Nematron family of open models on Amazon Bedrock and SageMaker. Amazon will also adopt our full physical AI stack, Omniverse, Cosmos, Isaac, and Jetson, to power its fleet of warehouse robots. ACI&E revenue of $40 billion increased 25% sequentially and 138% year over year. Growth was driven by neocloud capacity additions to meet the rising demand from enterprises, AI startups, and sovereigns, as well as hyperscalers purchasing capacity to supplement their own build-outs. Using NVIDIA DSX reference designs, our Neo Cloud partners are bringing capacity online faster and at lower token cost. They are expected to exit the year with 8 gigawatts in total installed capacity, up from approximately 3 gigawatts at the end of 2025. Incredibly, we are seeing demand acceleration even at our scale. Customers' forecasts point to our growth doubling next year. However, as I mentioned earlier, we expect to grow approximately 70% as we are supply constrained. NVIDIA Compute is fully utilized across every cloud we serve. The economic value it generates for our hyperscale, NeoCloud, and AI lab partners keeps rising. Besides building the best AI computing technologies and the most capable supply chain, NVIDIA has 3 unique capabilities that are engines powering our growth. First, NVIDIA's architecture runs every model, and we're growing share as closed and open model adoption grow. Closed and open models alike, adoption is skyrocketing. NVIDIA runs the leading closed models, OpenAI, Anthropic, Grok, Meta, Gemini, and the leading open models, TML, Mistral, Quinn, Kimi, GLM, DeepSeek, Minimax, and Nematron. We're great at small models and giant ones, large or video, auto, regressive, or diffusion, in the cloud or in the edge. NVIDIA is great at training, great at inference, great at agentic workloads. One platform, fungible for every model and workload, durable for the entire lifecycle of AI. That combination of performance, fungibility, and durability is what makes NVIDIA the productive and financeable compute infrastructure. Our second unique capability is our full stack AI factory platform that is expanding our share of the data center TAM. Since Hopper, our revenue opportunity has grown from roughly $18 billion per gigawatt to $25 billion with Blackwell, to $40 billion with Vera Rubin, which now spans Vera CPU, Rubin GPU, NVLink, InfiniBand Ethernet, and Grok LPU announced earlier this week. Our ability to extreme code design across GPU, CPU, NVLink scale-up networking, scale-out networking, systems, algorithms, and software enables us to deliver X-factor performance gain every generation. Vera Rubin exemplifies this, delivering 30x higher throughput per megawatt and 35x lower token cost relative to Grace Blackwell Ultra. We commenced production shipments of Vera Rubin earlier this month. Having already received purchase orders from every major hyperscaler, AI cloud, and system OEM, we expect Vera Rubin to mark the fastest product ramp in NVIDIA's history. Our networking business had another record quarter with revenue growing 18% on a sequential basis. Spectrum X Ethernet, which grew 2.6x on a year-over-year basis, is already helping us become the largest and fastest growing network company in the world. Rising adoption of agentic AI is driving an acceleration in demand for data center CPUs. Our Grace CPU, introduced in 2021, has been a great success, with revenue on a trailing 12-month basis exceeding $5 billion. Today, we are in full production of our next generation Vera CPU. As a standalone product, Vera expands our TAM even further. Vera completes agentic tasks 1.8x faster on the spec benchmark and provides 5 times the bandwidth per watt than any other data center CPU. We expect Vera to be deployed by every major hyperscaler, NeoCloud, AI lab, and system OEM, with shipments already underway to our lead partners, including OCI, SpaceX AI, and starting this quarter, AWS. We continue to see demand for approximately 20 billion in total server CPUs. And based on our customer demand and improving supply outlook, our preliminary expectation is for CPU revenue to more than double in fiscal 28, positioning us as one of the world's leading server CPU suppliers. Since the announcement of our Grok partnership last year, we've been working to unite NVIDIA's high throughput and Grok's high interactivity architectures. At Hot Chips earlier this week, we announced that Grok 3 LPX, our first rack-scale LPU system, is in full production and already setting records, demonstrating nearly 4x the number of tokens per second against the next best alternative on our artificial analysis benchmark. We expect to ship Grok 3 LPX in volume later this quarter to early adopters. Nebius will be the first. Today, we're not just selling the best chips, we're selling a full-stack AI factory platform, offering superior economics for customers and capturing a bigger share of the data center TAM. Our third unique capability is the combination of our full-stack AI factory and rich CUDA ecosystem, allowing us to extend AI into markets a single chip alone can never reach. Beyond the hyperscalers lies a massive market anxious to adopt AI.
Let's see how
Customers
Nebius
with
is
no
doing.
interest in designing their own custom silicon. NVIDIA's fully proven full-stack platform is uniquely suited to help sovereigns, neoclouds, and enterprises build their AI infrastructure, bring it to full operation, continuously optimize it through CUDA software, and connect it to offtake demand from our vast developer ecosystem. Hyperscalers will remain a major growth driver, but non-hyperscaler growth, our AIC and E segment spanning sovereign, regional neoclouds, enterprise, edge, and air-gapped data centers will represent roughly half of our data center business. Our AI native startup ecosystem, developed and running primarily on the NVIDIA compute platform, is scaling at a rapid pace. Global VC funding in AI, roughly 70% of which is spent on compute, exceeded $400 billion in the first half of 2026, surpassing the $265 billion raised in all of 2025. Nearly 20 companies, including Cursor, owned by SpaceX, Figma, and Together AI, now exceed $1 billion in annualized run rate revenue, up from 13 companies in Q4 of last year, with vertical enterprise software logging the fastest growth. In enterprise, on a trailing 12-month basis, on-prem revenue in the automotive vertical reached $8 billion, while financial services, manufacturing, and healthcare combined contributed $7 billion in revenue. Hudson River Trading and Jane Street are leveraging NVIDIA's powered AI factories to accelerate quantitative trading. Samsung Electronics is using NVIDIA Cullitho to achieve up to 20x greater performance in computational lithography, while Bristol Myers Squibb is investing in Vera Rubin AI Factory, a fast follow to the Roche and Lilly buildouts, as drug R&D timelines compress from years to months. In sovereign AI, our business, primarily through the regional neoclouds, grew 35% sequentially and more than tripled year over year in Q2. A country or region can allocate land and power directly to a regional cloud partner in ways it never would to a foreign hyperscaler. We don't own a cloud ourselves. We are a neutral partner to every sovereign and neocloud. And because NVIDIA compute is productive, fungible, rentable, and durable, regional cloud interest is surging around the world. We helped CoreWeave, Nebius, and Nscale build entire infrastructure businesses, and neoclouds are emerging everywhere. Firebird in Armenia, Cassava Technologies across Africa, GMI Cloud in Taiwan, Yoda and NASA in India, Firmus in Australia, YTL AI Cloud in Malaysia, pairing local land, power, and operating expertise with our platform. Last month, we announced a partnership with Noetra, Japan's national AI company, to build an NVIDIA DSX AI factory that will create open models to power AI agents, digital twins, robotics, and physical AI applications. South Korea's LG and Hyundai Motor Group are partnering with NVIDIA to build and scale AI. And in Europe, a record 35 new NVIDIA-powered AI supercomputers were unveiled to advance industry and scientific breakthroughs. Neoclouds are seeing strong demand pipelines from many diverse off-takers. Rather than allocating their entire capacity to a single long-term offtake guarantee that lenders typically require to finance a data center independently, we have introduced a revenue sharing structure. NVIDIA provides a take-or-pay commitment on a portion of the facility's capacity, a minimum revenue guarantee that gives lenders the confidence to underwrite the project, and in exchange, we share in a portion of the NeoCloud's revenue earned above that floor. Independent capital still underwrites every deal on its own merits. We're not making loans. In this model, we get paid twice, once on the hardware sale and again through the share of rental revenue, a highly reoccurring stream layered on top of a one-time equipment purchase. Over time, this model can expand our addressable market and create reoccurring usage-linked revenue stream alongside our core platform revenue, with the potential to drive billions in revenue over the medium to long term. Together, NVIDIA's three unique capabilities: a platform that runs every model, a full-stack AI factory platform capturing more of the data center TAM, and a CUDA ecosystem that extends AI into markets no single chip could reach alone, reinforce one another, and are the engines of our growth. Let me update you on our progress with our Frontier AI Labs. The Frontier AI Labs have extraordinary demand for training and inference compute, but they are growing faster than what their balance sheets and credit profiles can support. They have rapidly growing customer demand, yet still lack the decades-long infrastructure contracts and investment-grade financing capacity needed to secure the AI factory infrastructure independently. In other words, their growth isn't limited by their technology or customer demand. It's limited by compute. For these companies, more compute means more intelligence, more users, and more revenue. NVIDIA is needed to help power this flywheel. First, we've invested nearly $50 billion in the Frontier AI Labs. This was a meaningful commitment, but it represented a small fraction of our expected free cash flow over the same period. Further, to support the Frontier Labs infrastructure buildouts, we recently announced partnerships with 6 of the world's leading infrastructure capital providers: Apollo, BlackRock, Blackstone, Brookfield, Goldman Sachs, and KKR, to establish financing platforms that will raise over $500 billion of third-party capital. With these partnerships, building on our unique, fungible, and durable computing platform, the AI Labs will be able to build and assess AI infrastructure funded by long-term institutional capital at relatively attractive rates. Last week, we announced that we secured land power shell capacity through our partnership with SoftBank Energy to exclusively host NVIDIA Compute at their Portsmouth campus. The initial deployment, expected to support 4.25 gigawatts of AI factory capacity, will be utilized by OpenAI. Each generation of NVIDIA AI factory systems deployed at Portsmouth could represent approximately 1.5 million NVIDIA GPUs, and over 20 years, the site could support multiple upgrade cycles. Here's the essential economic point. The LPS commitment secures a long-lived AI factory site, while the NVIDIA compute within the data center can be upgraded repeatedly. This project deepens our longstanding partnership with OpenAI. OpenAI has committed to substantially deployments of NVIDIA AI infrastructure through 2030. OpenAI's existing and planned commitments represent approximately 12 gigawatts of NVIDIA compute. For another frontier AI lab, we will provide selective credit enhancement for nearly 2 gigawatts of compute. This complements the substantial NVIDIA compute capacity they've secured independently without NVIDIA's credit support. We recognize the scale of this support, and we know some will call this circular financing. We see it differently. We're going through a major computing platform shift, the creation of one of the most important technologies in human history, and these are once-in-a-generation companies. Their technology leadership is proven, and their customer traction and usage are skyrocketing. We expect them to become the largest technology companies in history. We believe these investments, measured against the strength of their demand, the business they create for us, the ecosystem they build on NVIDIA's platform, and the equity returns on our invested capital will be excellent. And our risk is limited. The NVIDIA compute platform is fungible and durable and can be redeployed to support other customers. For context, we expect demand from the AI labs for which we expect to leverage our balance sheet to contribute toward roughly a quarter of our business next year. This remains compute we ship will be consumed by investment-grade customers or those that are backed by one. In Q2, we shipped less than 1% of our total data center revenue in Hopper 200 products to customers based in China in accordance with the US government licenses. Current Hopper shipments are dilutive to corporate gross margins, and given ongoing geopolitical uncertainty, there is no China data center compute revenue in our forward outlook. Moving to the rest of the P&L, GAAP and non-GAAP gross margins were both 75%, largely unchanged from last quarter due to a similar product mix. GAAP and non-GAAP operating expenses were up 10% and 11% sequentially, primarily due to high compute infrastructure costs and compensation and benefits costs. Our non-GAAP effective tax rate of 16% increased from a year ago, primarily due to higher revenue. On our balance sheet, inventory increased to $32 billion as we prepared for the Vera Rubin launch. Days of sales outstanding increased to 60 days, reflecting extended payment terms for large purchases by certain investment-grade customers to be shipped over multiple quarters. In Q2, we returned a record $26 billion to shareholders, $20 billion through share repurchases, and $6 billion through our quarterly dividend of 25 cents per share. Relative to our plan to return 50% or more of free cash flow, we have returned 60% on a year-to-date basis. And going forward, we intend to increase and return excess free cash flow net of strategic uses. Let me turn to the outlook for the third quarter. Total revenue is expected to be $108 billion, plus and minus 2%. We expect sequential growth to be driven primarily by ACI&E with data center, while growth in hyperscale is expected to re-accelerate in Q4 and into fiscal year 28 as supply of Vera Rubin grows over time. We see Vera Rubin accounting for about 20% of data center revenue in Q3. Looking ahead, our preliminary expectation is for fiscal year 28 revenue to grow approximately 70% year over year. Although we will work to close the supply-demand gap, we expect supply to remain a bottleneck at least through the end of fiscal year 28. Many of you have expressed concerns regarding our gross margins as component costs have risen significantly. As you are already aware, we are experiencing extreme pricing conditions in memory. The magnitude of the price increase has exceeded our prior expectations and are headed even higher into next year. As a result, we are resetting expectations today.
Wow, is that
For
bullish
Q3,
memory?
we expect GAAP and non-GAAP gross margins to be 74%, plus or minus 50 basis points. We expect margins to bottom in Q4 in the 71 to 72% range, before settling at 72 to 73% in fiscal year 28, as executed price increases take effect in Q1. We want to be direct about this rather than let it linger as an open question. Memory scarcity today is being driven in large part by the AI build-out itself, and unlike a component that simply raises our cost with no offset benefit, tighter memory supply is a symptom of the same demand surge that's driving our own growth. We have long-standing, deep relationships with all three major memory suppliers, and we're working closely with them to further increase the capacity our roadmap requires. GAAP and non-GAAP operating expenses are expected to be approximately $9.2 billion and $9.0 billion, respectively. For the full year, we now expect OpEx to grow in the low 50s, driven by a broadening of our product portfolio and further increase in the usage of AI tools, which is already and will continue to enhance engineering productivity. For full year, fiscal year 27, we continue to expect GAAP and non-GAAP tax rates to be between 16 and 18%, excluding any discrete items and material changes to our tax environment. With that, we will now transition to Q&A. Operator, please poll for questions.
At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. Your first question comes from the line of Joseph Moore with Morgan Stanley. Your line is open.
Great, thank you. I wonder if you could give us color on the 70%, and what gives you the confidence to guide a full year out? You haven't been doing that. And then what's the gap between that amount of growth and the 100% demand growth? What is the kind of key constraint that separates those numbers, and could you close those gaps over time?
Yeah, thanks, Joe. As you probably are aware, AI has become useful, and the AI agents that are being adopted everywhere use an enormous amount of compute. First of all, the large language models are larger than ever because they're smarter than ever, and these agents go through reasoning and planning, multiple turns of tool use. The amount of compute necessary for an agent versus a human using it is probably 15 to 100 times, depending on the type of problem you're trying to solve. And so the amount of compute necessary is just extraordinary. That's a factor that almost everybody sees. The part that people don't see about our growth, because we're practically singular because of the nature of how we deliver products. I mean, we're the only company in the world that creates and builds, offers an entire AI factory platform, a full stack system. And customers can still mix and match. However, most companies just don't have the skills to do that or desire to do that. And so there's an entire part of the market that we experience growth. There's sovereign AI, the regional AIs, their neo clouds, their AI startups, their enterprises, where we're seeing, which represents about half of our business, and that's growing 100% a year. That part of the world's computing is likely to be larger over time than even what we're currently experiencing in the cloud. And so, I think the demand that we see is driven by all of those factors. It is also the case that you can no longer procure technology per se and stand up these infrastructure. You've got to go secure the land, power, and shell, which oftentimes is a couple, 2-3 years out. All of the rest of the supply chain necessary to align the construction, the power, the cooling, all of the labor that's necessary. And AI infrastructure is creating so many jobs all over the United States and all around the world. It just takes a lot more planning. And so we're involved in securing infrastructure now, further down the pipeline. Just as a long time ago, people asked me, why is it that we're working with memory suppliers when we're a chip company? And today people understand it's really quite genius that we were working on our supply chain so far upstream. We work with power generator companies. We downstream. We work with land, power, and shell companies all around the world, and that helps prepare all of this computing that's going to be built that will ultimately deploy for our ecosystem and our customers. And so we just have a lot greater visibility now, upstream and downstream. It is the case that we've never forecasted or never guided to a year in advance. And even though our demand is much greater than 70%, our supply allows us to confidently deliver 70%. And we're going to continue to work with our supply chain to increase on that. But what we wanted to do is to be consistent with everybody, from our customers, our shareholders, our supply chain. Everybody sees the same view. And the reason why that's important is because, everybody's putting a lot of resources at play. And so we wanted to make sure that everybody has the same set of information. And we've got a huge year coming up next year, and it's going to be pretty extraordinary.
Your next question comes from the line of C.J. Muse with Cantor Fitzgerald. Your line is open.
Yeah, good afternoon. Thank you for taking the question. There's tremendous investor focus on your inference market share. Can you speak to the evolving workloads you're seeing with agentic AI and how you see your share evolving here over time, particularly when you reflect on the growing value of the TAM you're seeing with each new full stack generation, your expectation for greater growth from ACIE, and then also including Grok 3 LPX? We'd love to hear your thoughts.
Yeah, thanks, CJ. The AI lifecycle is getting way more complex than it used to be, and it's playing into NVIDIA's architecture much more greatly than it used to be. And so you could kind of see it as 4 phases. There's the first phase, which is preparing all of the data that you need. Some of it is synthetic, some of it is real, some of it is human labeled and generated. Pre-train the models, and then there's post-training, the third phase, and then there's the agentic inference. And agentic inference is extremely complicated. And so every one of those phases are complicated. The thing that's really great about the NVIDIA architecture, and we created this with NVLink 72, and it was a big surprise on the world when we first created the world's first rack scale architecture. It was hardly easy, and it was very challenging building the first generation. We're now in our 3rd generation of NVLink 72 rack scale systems. We had to reinvent the entire supply chain, reinvent systems, reinvent the technology, redistribute our software, refactor our software. Everything, every aspect of it was hard. But what it allowed us to do was to create one fungible system that allows us to transition from data creation, data preparation, to pre-training, to post-training, to agentic inference. The benefits to customers is incredible. And the reason for that is because you've just spent, and we just mentioned, each gigawatt of technology and NVIDIA's revenue exposure in the Hopper timeframe with Hopper plus InfiniBand, and now Vera Rubin and CPU, and 3 types of different networking, because it takes that many types of networking to address the entire world's data center, not to mention the scale-in security networking and the scale-across multi-campus networking. So you could argue 5 different types of networking systems, and then of course Grok. And all of that increased our revenue contribution or revenue opportunity per gigawatt to $40 billion. So each gigawatt of data center increased from, say, $30 billion about 5 years ago to now $60 billion today. Of course, the productivity is tremendous. The performance is incredible in comparison, but you're talking about a $60 billion investment. And to the extent that you could use it across multiple phases of the AI lifecycle, run every single type of model you can imagine running on it, whether it's diffusion or autoregressive or state space or some hybrid version of that, every version of attention mechanism you can think of, small or large models, the investment that you make will be preserved and useful and productive for a lot longer time. And so I think our advantage in this new world is really quite extraordinary, and it could explain, why it is that our growth is actually accelerating. It was already large, but now it's accelerating. Let's see, you asked about Grok. I was super excited about Grok 3. We achieved a record token interactivity rate, extremely low latency performance generation. The team is doing fantastically. We spent the last several months fusing the NVLink architecture, which will be the core, and it'll be the core engine. And then for services that would like to have super high interactivity, super high speed token generation done, the throughput is going to be a lot lower. The cost per token will be higher, but you could associate it with high ASP services. And so for those companies, you could bolt on one of our Grok accelerators. I'm super excited about that. But the vast majority of the world's data centers will just be Vera Rubin NVLink 72.
Your next question comes from the line of Stacy Rasgon with Bernstein Research. Your line is open.
Hi, guys. Thanks for taking my question. So the 70% growth in fiscal 28, which I guess is sort of calendar 27, so that's something like, a $200 billion uptick versus the prior outlook. If I back it out, the prior outlook was $1 trillion over the 3 years. So this is probably 200 billion more. I was just wondering if you could talk us through the contributors to that increase across the different products, Vera and CPUs and Grok and everything else. And also, you talked about your price increase that takes effect in Q1. So I assume some of this is pricing. And I guess I'm also curious, and maybe I'm squeezing too many questions in here, but I'm also curious, just it's a constrained number. What would it be if it wasn't constrained?
The unconstrained would be a lot higher. It's we grew 100% year over year this year. The unconstrained, is significant, and so we're just going to have to go work hard to get more capacity. And we have a large supply chain. We have a really gigantic supply chain, and so we have incredible partners, and we've secured a lot of supply, but we just need a lot more. To break it down, the way to think about that is most people see just hyperscalers, and that's half of the picture. The other half of the picture is what we call AC, and that's all the enterprise, the neo clouds, the sovereign AIs. That part of the world is invisible to everybody, and the reason for that is because they don't buy custom chips. They don't buy chips one at a time. They really need an entire factory platform built for them. And so that's a space that we add just a tremendous amount of value. Now, of course, back in this hyperscale space, that's growing incredibly too, right? You know that they now have backlogs of $2 trillion. You know that when they stand up NVIDIA Compute, when that happens, their revenues go up, their earnings contribution go up. Compute is profitable, very profitable today, and compute directly translates into increased revenues. And so there's just a race to want to bring more NVIDIA Compute online, both at the hyperscalers, but what you don't see is just really tremendous opportunities outside of the hyperscalers. But the other part of it is, and it's the reason why we mapped it out for you. In the case of Hopper, we were at about 18 billion per gigawatt. For Grace Blackwell, we're about 25 billion per gigawatt, and for Vera Rubin, it's about 40 billion per gigawatt. And the productivity is, X factors increase in each generation. And so customers want to race to the next generation as fast as they can. Meanwhile, because NVIDIA's compute is so productive, the tokens they're generating, the GPU hours they're renting out is insanely profitable, as you know. Their margins are fantastic. And so all of that is just simultaneously happening. I think the big picture is that we're going through this platform shift, and it affects every computer company. And every industry in the world uses computers. So therefore, every industry is affected. Every company is affected. And this new way of doing computing is intelligent. It's not based on retrieval of files, but it's now generating intelligence. And that requires compute. But the results you get is phenomenal. The results you get is tremendously better. And so, we're just seeing that across the world. Everybody wants to be part of the AI revolution. Everybody will have to be part of this computing shift, and everybody has to build infrastructure.
Your next question comes from the line of Vivek Arya with Bank of America Securities. Your line is open.
Thanks for taking my question, and thanks for providing all the transparency and all the commitments and guarantees that you have for a number of years. When I just add up everything that's in the CFO commentary, I get to a number of about 500 billion or so, obviously over the next several years. So I had a few questions related to that. First is that the takeaway, that the sum of all your ecosystem investments over the next several years is in that ballpark, or are there other equity or other investments that could still be ahead? That's one. Secondly, if there is a specific cash, part of that that we should think about in fiscal 28. And then, Jensen, a lot of these investments are, designed to help the frontier labs, especially OpenAI and Anthropic. But both of them are designing their own custom chips. In fact, OpenAI just, in the last few days spoke about Jalapeno and their claims about being better than Blackwell and so forth. So how are you balancing this dynamic where you want to invest a lot in the ecosystem, but part of that ecosystem wants to develop competitive solutions? Thank you.
Well, we're building something very different. Whereas many of these XPUs are inference-specific chips for one cloud or one service, NVIDIA is a platform, an entire AI factory platform that spans the entire AI lifecycle that you can use in any cloud. It's in every cloud. You can run anywhere. We'll help you set it up anywhere. And so we built something very different. All of the AI services at some point are going to want to go around the world, and those data centers won't necessarily be just built by them. And also, I fully expect, and so they're going to run, and I think they're going to run on NVIDIA all around the world. And of course, I think our technology, I have 100% confidence that our technology will continue to be extraordinary for them, and that the economics of using our technology, whether it's from data processing to training, to post-training, to agentic processing, our technology is going to be extraordinary for them. They're going to use it. And so I have every confidence that they're going to be customers and partners of ours for a very long time. Now, having said that, taking a step backwards, investing in these two companies, or there are several AI labs that we've invested in, investing in these companies are once in a generation opportunity. I think the only regret that I have is that I didn't invest more and sooner. And two of the companies will likely go public soon, and others will follow. And these will be some of the most consequential technology companies in history. And so I'm delighted to be their friend. I'm delighted to partner with them. I'm delighted that they're building an ecosystem on top of the NVIDIA architecture. I'm delighted that they're counting on us to scale up. And I have 100% confidence that, through quite a long period of time, they're going to be utilizing NVIDIA compute for a lot of their computing. And so I feel great about it.
So Vivek, let me add a little bit more regarding the commitments and the portion within those commitments, which is our supply commitments. This is essential. This is essential for the raising of Vera Rubin today, as well as all next year. You can see that those commitments, the biggest parts of them are in the first 3 years, and we will use that to build the products that we need. This would also gives us the confidence in terms of our growth and revenue, given how much we have already aligned in commitment in terms of our supply, as well as capacity that we would need.
Your next question comes from the line of Timothy Arcuri with UBS. Your line is open.
Hi, thanks a lot. Jensen, I wanted to ask about open source. There's a lot of talk about that these models could gain share for workload in the US. You're obviously well positioned with Nemotron, but on the other hand, a lot of the end demand is being driven by these big frontier model companies. So there's a lot of investors that equate open models as being negative for the growth of those companies. So how do you sort of put and take that? Do you see the rise of open models as being good for NVIDIA or ultimately negative? Thanks.
The world will need both closed models and open models. And both closed models and open models are skyrocketing in use. I would say nearly all open models run on NVIDIA. And the reason for that is because NVIDIA's footprint around the world is the highest. And our architecture is the most fungible. It's everywhere. It's in PCs and edge devices like DGX Spark, which is doing great, all the way to robots and workstations and your on-prem data centers. Open models are doing incredibly well. Closed models we know are doing incredibly well. The frontier labs, their sales are skyrocketing. Their margins are fantastic. They're generating profitable tokens. They're only limited by the amount of compute. That is equally true for open models. And our position in open models is very good, because the CUDA ecosystem is literally everywhere. The open models are also foundational to just about every AI startup and every enterprise company around the world. It's vital to them. And the reason for that is because you should rent intelligence, strong intelligence, smart intelligence, wherever you can, which is the reason why we rent it. And I encourage my employees to use the cloud services as much as they can. But every major company and surely every country and every startup needs to build their domain specific, their proprietary AI, their proprietary alpha. And the open models reaching frontier levels has made it possible, has enabled them to all do that. One of the areas where frontier models is vital is cybersecurity. You see the number of cybersecurity companies that are enabled by frontier models so that they could have massively distributed, continuously running autonomous cybersecurity systems to defend. Those companies are emerging. There's some amazing companies. They couldn't do it without open models. And so open models is both incredibly successful and has finally reached the frontier, but it's also vital to the American economy. It's vital to the world economy. It's vital to companies to build their own proprietary AI. You can't do without one or the other. Both are going to be extraordinarily successful. And lastly, as you know, our market footprint of all AI models, I think we're the only platform, I'm fairly certain we're the only platform that runs every frontier model. And whether it's closed or open. Most of them were built on NVIDIA, and so they run great on NVIDIA. And so we're delighted by any model succeeding, so long as models succeed. I'm very happy. And both closed and open models are going to succeed, and they're both simultaneously driving our sales.
Your next question comes from the line of Ben Brightsis with Melius Research. Your line is open.
Yeah, hey, thanks. I wanted to ask you a question, Jensen, about demand in a different way. You talked about demand growing 100% next year, and I wanted to kind of get a sense for a couple things driving that and even beyond that. And there's two concepts here. There's recursive self-improvement, which apparently at Anthropic and OpenAI is going very well with AI that improves itself. And even OpenAI said it hit AGI by the end of this year. And with the developments in RSI as well as AGI, what happens to industry demand? Does it inflect further? And what does it mean for NVIDIA when those things take place? And how are you looking at that as a demand catalyst? Thanks.
I appreciate that. It's going to inflect further. Today, the vast majority of AI is prompted by people. I believe that this last month it has crossed. Most AI are now agentic, but in the future, every company will have a whole bunch of agents. We have 40,000 employees roughly. In the future, we'll have 400,000 agents, 4 million agents, and those agents are running continuously. They're running in the background. If you know anybody who builds edge, personal AI agents, and they run it on their like a DGX Spark, and I know a lot of people who run it on DGX stations. This incredible workstation that we built, and you can buy it from Dell, and they're incredible. And these AI agents running on a DGX station runs 24/7 because you got stuff for it to do all the time. And so when the world goes to fully agentic systems, you're going to have agents running all the time, working with other agents running all the time, and those will be working in the background, improving your company, improving your lives. In a lot of ways, we're kind of recursive at this point, and you could argue it's coarse-grained, but every time you run through an agent, it reflects on how it could do a better job next time, and it updates the skill file. And so the skills document, the markdown, is updated at the end of every single one of them. And so next time you run it, it's going to get better. It's a kind of a loosely coarse-grained self-improvement. And so you see that all over, always. And so in a lot of ways, and for many tasks, we could say that we've already achieved AGI. I think all of those milestones and all those, they're kind of senseless at this point. I think the most important thing that matters for the industry is that, one, AI is now doing productive and useful work. Two, AI is generating profitable tokens. And three, if we had more compute, we could generate more profitable tokens, which results in more profit for all of the services. This is the exact phase where we're at, which is the reason why everybody's leaning in.
Your next question comes from the line of Jim Schneider with Goldman Sachs. Your line is open.
Good afternoon. Thank you for taking my question. If you think about the 100% growth you talked about in terms of the unconstrained demand growth, you're expecting the 70% you expect to fulfill in terms of supply. Can you maybe talk about or rank order some of the most acute constraints, whether that be things like data center power and shell availability, DRAM, wafer foundry availability, et cetera? If you could maybe help us understand, which are the biggest among those, that would be very helpful. Thank you.
There's something funny I could say, but I'm going to just not. Last year, one of the funnest things to do is just to go figure out where I go for dinner and who I have dinner with, and their stock price doubles the next day. I think the answer is our entire supply chain is challenged, and it's everybody is really running flat out. And more capacity is coming online all the time, which is one of the advantages. What's going to happen this year? It's not going to come online in just an instance in time, but it's going to come online every day. Yields are going to get improved. We're going to be doing yield improvement. We're going to work hard on working with every one of our suppliers, and so it's not even next year yet. And so we've got lots and lots of time to work hard every day. And so at this moment, we have supply for 70%. We have more supply than 70%, but about 70%. Our demand is much higher than that. And we've got to go work hard, or we're going to be disappointing customers. And we like not to disappoint our customers, and we like to work hard for them. And so I'm going to need the help of the entire supply chain to help me out here. But they all know that. What I'm telling you about our needs for next year is exactly consistent with what I've told them. Everybody's on the exact same song sheet, and I'm trying to be as transparent as we can because we're talking about big numbers.
Your final question comes from the line of Aaron Rakers with Wells Fargo. Your line is open.
Yeah, thanks for taking the question. I want to go back to the gigawatts, the 25 to 40, and maybe try and understand, I think, Jensen, you said at some recent conferences that, that's going to further scale. So, as we think about the path even beyond Vera Rubin, we think about Vera Rubin Ultra and so on and so forth. Should we really conceptualize 40 billion goes to 60 billion, 80 billion? And then, I guess, underneath of that question is, how do we kind of think about your ability to scale the capacity deployments? Is it a linear function, or is there something that, kind of unlocks your ability to supply more demand as we look through fiscal 27?
Great question.
Or 28, sorry.
Yeah, great question. Great question. And very simple. Is our goal to put as much compute on a plot of land? Is our goal to put more compute into 1 gigawatt or less? And so obviously, we would like the speed of light answer. The perfect answer is actually infinity per gigawatt. And so if we could literally get $1 trillion of compute into 1 gigawatt and one piece of land power shell, it would be a fantastic outcome. And so the answer is directionally in that direction. We started in the world of general purpose computing during Moore's Law. We were probably, pick your favorite number, but I'm going to go with something like $5 billion, $3 billion per gigawatt of compute with general purpose computing. And then eventually with Hopper, it was 18. Now Grace Blackwell is 25. Next, Vera Rubin is 40. And after that, it's going to be higher. And that's excellent. That's fantastic for the industry. It's fantastic for customers. So long as the productivity of it continues to grow, the durability and the fungibility continues to grow, then people are happy to invest in assets that generates revenues, generates profits, and helps them recoup their returns so incredibly fast. I mean, I heard the other day that return on investment capital is now less than a year. And we're talking about $50 billion data centers. And so that tells you something about the productivity of NVIDIA's technology and the rentability of it. I want to thank all of you for joining us today.
There are no further questions at this time. Toshiya Hari, I turn the call back over to you.
All right. November 17th. All right, so NVIDIA Q3 is November 17th. Wow, I guess what a quarter. I think we were expecting for, I think earlier on I was asking, what is it that we needed to see from NVIDIA in order for them to get the market excited. And I think what we actually saw from NVIDIA was exactly what we needed. Now, the price was actually down 2% when they first released the results. And that was because people were hyper-focused on this 100 basis point decline in margin expectations going into Q3. They actually addressed it on the call. I believe they said that they are expecting margins to come in. Let me see, where were my notes? Okay, so they're expecting margins to come in 74% in Q3, then for margins to bottom in Q4 at around 71 to 72 percent, and then from there, yeah, and then from there to settle at around 72 73%. So they were saying that basically they actually projected out these margins based on certain supply chain expectations. Supply chain, the memory costs and things like that skyrocketed faster than they expected, so therefore slight hit in margins over here. So if you look at this, maybe you can say it's bullish memory, at least for the next year. Now, I think one thing that the market really appreciated is the annual guidance. I think generally markets expected a 40 to 50% year-over-year growth next year in 2027. However, they just told us that growth is, they're looking to try and grow at double the pace at what they're doing this year. And this year, they're already growing at 80-90%. Next year, they're hoping to double. Insane. But they tell us that their supply chain can definitely produce 70-ish%, right? That's what Jensen was saying. So the markets were expecting 40 to 50% year-over-year growth. Supply chain right now, today, even if they do not expand their supply chain, can deliver 70% growth. So nearly 75% more growth than what the market actually expects. Market expects 44. That's the number that I'm seeing. They're doing 75. It's an additional nearly 70%, sorry, that additional 28% growth. So 70% faster than what the markets were expecting. That definitely excited the stock. And I think we see NVIDIA up 4.6% right now. I expect this to go up even further. And then on top of that, you can see that, you see, this is exactly why I am more bullish on companies like Nebius and CoreWeave with a deeper relationship with NVIDIA. I think NVIDIA will not favor any one company, that is for sure. But you just want to be in and around that, I would consider, inner circle. And it just doesn't feel like Iran is in that inner circle. So I believe on the call, they said that Grok 3 LPX will go to Nebius first. Am I wrong? I thought I heard that somewhere. I'll have to double confirm. Right, and I think you can see that he was trying to, towards the end of the call, I think he's trying not to like pump up any one particular name in general. He spoke about the supply chain broadly and how they needed the entire supply chain. I think this is a good day, right? You are seeing the validation of the software side from Salesforce. You are seeing the validation of the cybersecurity side from CrowdStrike. And of course, the big daddy of it all, NVIDIA and Jensen, with the hardware sector. I think they are showing that, look, capital expenditures are expected to increase from the hyperscalers. Amazon is expanding their AWS deal. I think the rest of the hyperscalers are a little bit more muted post after hours because, of what NVIDIA just said. They are looking to do around $800 billion of capex this year, which also is higher than expected. I think the street expectations was for around $700 billion of capex in 2026, right? But now Jensen is telling us that we are expecting around $800 billion in capital expenditures in 2026, which means still a little bit of expansion to go going into Q3 and Q4 from the capex perspective. And then going into calendar year 2027, he's expecting around $1.3 trillion in capital expenditures from these hyperscalers. And I think that is where you can look at it as bullish and saying definitely the AI race, the AI build out is not over. Or you can also say that, hey, maybe they're overextending themselves. And I think that's the balance that the market is trying to strike. But as of today, it does seem like we are biased to the upside. Markets are liking what they are seeing. We are looking, if you are looking at the charts right now, you can see the names right at the top. Google down 0.2%. Amazon, I think that's because of their deal that NVIDIA announced. They are up 0.7%. Meta up 0.45%. Microsoft basically flat. Apple down 0.7%. Tesla up 0.6%. And so those are the bigger names. But where you really see some of the some of the companies that really benefit from being in and around NVIDIA's ecosystem. Nebius up 7%, CoreWeave up 5.4%, because if Nebius, I feel like Nebius and CoreWeave, like usually either one of them will get dips on, the first product. So this time round, it's Nebius. Previously, when they first released Vera Rubin, I believe CoreWeave was the first one who tested it out. So that's what NVIDIA is trying to do. They're trying to like make all of their partners happy at the same time. And they don't want to be seen to be biased to any particular one supplier. So I ran up 2%. So you can see over here very, very clearly that like the market appreciates the relationship that CoreWeave and Nebius has with NVIDIA. And CoreWeave is still $10 billion more than Nebius is still worth $10 billion more in terms of market cap compared to CoreWeave, but doing less on revenue. So there is still space for CoreWeave to run. I think with the news that we are seeing today, we are likely to see CoreWeave, because today actually CoreWeave rejected off the 50-day, right? So initially I thought we might see a slightly red day tomorrow, but if we are seeing this 5.3% after hours move, hopefully it doesn't get faded in tomorrow markets open, and then we at least form some sort of support above the 200-day moving average. I have 6 times more AMD than I have NVIDIA, but I'm a total degenerate. No, AMD has done extremely, extremely well this year. AMD has done extremely well this year. Yeah, when I started this portfolio, I had to sell my AMD off at 250, and then since then it doubled again. So could have been a 4-5x, but I didn't want to start the portfolio with AMD inside. I felt like that would be unfair, so I wanted to buy everything on day one, and then let's do decent 40% returns on the year. Okay, so I think with NVIDIA's earnings, quick summary: $800 billion in 2026, 1.3 in 2027 capex, AWS expansion. Demand is accelerating. Growth expected to double in 27, 70% growth because of supply constraint. Vera Rubin, fastest product ramp in their company's history. And I need to dig a little bit into that whole rental revenue and equipment purchase thing, right? So I have to really try and understand how that works. I didn't really catch every single part of that. But I think they're talking about how that increases their TAM. It allows them to sell the thing once and then still benefit from recurring revenue. And I believe it's a revenue share agreement. So once they get past a certain point of revenue, then, NVIDIA gets a little bit of a cut on that. So let's see how that ends up. So at the end of the day, NVIDIA is still finding different ways to be part of the various the various supply chain through the entire AI cycle. And so towards the end of the call, they were asking, if you're looking at some of the companies that they're trying to work with, Anthropic, OpenAI, trying to generate their own chips, how does that differ from NVIDIA, and how does NVIDIA actually separates itself? And he talks about Jensen talks about NVIDIA as an entire AI factory, whereas some of these companies they are really building the chips for that one particular use case, right? Whereas NVIDIA has a hand in every single aspect of the AI build up. So I think that's the core differentiator over here, and I think this is something that is telling us the numbers. I mean, you are going to see people come out and say that this cannot last. But every time people say that this cannot last, the numbers tell a different story. So I don't think if you're looking purely at the earnings itself, yes, numbers are bullish. If you're looking, how are they funding this? And then you get to private credit, that part of the argument, I think that's where it stands on slightly weaker ground, right? So whether or not private credit can actually support this, completely different question from whether or not the AI build-up can continue. Assuming private credit can support the build-up, the AI build-up can continue. I think this all falls apart if private credit is not able to support the AI build-up. But that is a credit issue and not an issue with the AI industry. And even if, financing gets a little bit too expensive, someone defaults, the whole industry takes a little bit of a standstill, it might be more of a reset than a complete wipeout of the AI industry. And I think in that situation, a lot of the smaller companies will then be really primed for being acquisition targets. So let's see how that plays out. Am I worried about the credit cycle? Yes, because I do think that if we do get some sort of credit event, it's not going to be pretty in the AI space. But I also do think that if we get some sort of credit event, I think we're just going to see consolidation in the AI space. It's not like we're going to stop using AI, right? The companies, if we do get some sort of credit event, companies are going to have to work through it. People are unfortunately going to get fired. Recession, we have to go through all of that nonsense. But at the end of the day, what is it going to look like coming out the other side of the tunnel? To me, it's still going to look like we are going to adopt AI, maybe at a more sustainable pace thereafter. And really, because of that, who is going to be the biggest beneficiary? If you ask me, I would say that I don't know for sure, but I know NVIDIA will be there. And I believe in the new cloud space, and I've said this all along, it is going to be a winner takes most. I don't think we might have a lot of smaller neo clouds right now. But once demand starts to soften, it is not Nebius and CoreWeave that are going to be in trouble. It's a lot of the smaller neo clouds. And the scary thing is that a lot of them are building for future capacity. And it seems like for right now, we have no concerns, right, over future capacity coming online. But will there be a case where that future capacity doesn't come online and they have already invested so much in the build up, right? And these smaller companies, they will have to be bought out by the bigger companies. And so with that, thank you for being here, everybody. It's been fantastic earnings for NVIDIA. I'll talk more about it over the weekend, along with the rest of the companies in the portfolio. SoFi up after hours. I mean, the entire portfolio is up after hours. We're about to doing decently well after hours. Portfolio is at all-time highs, $138,000. And I will see you tomorrow, 9:30 p.m., same time, same place. Hope your stocks stay green during the post and pre-market hours. And I'll see you in the next one.